Good morning, traders. Richard here, a quick Ichimoku Cloud Chart market review of the Spider ETF, S&P 500 ETF. We can see, just to recap quickly, just to refresh our memories in terms of the weightings of some of the large cap tech in that Spider ETF. So we can see Apple, Microsoft, Nvidia, Meta, the usual ones, will have quite an impact on the index for the time being until we get kind of a broadening of the rally to include some of the other sectors. You can see technologies, 42% of the index as of April, 30th of April is this data. Consumer 11 there, and healthcare 10, financials 9. So you can see still a lot of work to be done in the market, so we could still see a broadening of the rally, but we still need to tech still leading the charge in the market now. Looking at the Ichimoku Cloud, we've got the weekly Ichimoku Cloud up here. Just to recap, we had a beautiful rebound rally from this cluster of cloud chart support levels there. Then managed to break through the top end of the cloud, and now we have a little bit of a situation that we're now digging into this whole zone of resistance that we've had from November, December and January. That's now digging into that resistance. We can also see the turning line of the Ichimoku Cloud. There's also going to be a key level that's struggling to get past there, that the average moving there. And also now we've also got this gap here that we can expect to be closing in the next couple of months. So any kind of weakness in the market, we could see it dip back down to test the top end cloud chart for support. And if cloud support fails at that level, then the next downside target would be the bottom end of the cloud there. As long as the Spider ETF stays above this bottom end cloud chart zone, we're bullish. But we also got a problem that the front end of the cloud here is not twisted to the upside yet. So there's still some significant downside risk, as the front end of the cloud indicates that we're not out the woods yet, but at least we're back above the cloud. We've got downside risk if this resistance level holds to the top end of the cloud here, and to close that gap. So that's the downside risk on the weekly Ichimoku Cloud. Upside target would be these old highs here. That's the medium-term upside resistance targets there. So we can see 600 basically there to the upside. We need to break through that resistance out of this consolidation period, and that's the risk at the moment, that we're digging into quite a significant resistance on the weekly Ichimoku. We'll go up to the daily. I just want to put a line in that top end of the cloud there, basically, and then that front end cloud chart support level. So these are the two support levels, 581 and 574. Let's take a look at the daily Ichimoku Cloud. There we see nice rebound rally from these levels. We then had a turning line cross there. There's plenty of swing trades at this testing of the turning line as well as the standard line. And the turning line is a bit more aggressive than the rebounds from the standard line. We then had a Ichimoku Cloud Chart buy signal below the cloud, so there was another nice trade signal there. We then got that cloud chart breakout, gapped up, so we can expect this gap still to close. That's the downside risk on this chart, but at least the good news is we're back above the top end of the cloud, and as long as we stay above this top end of the cloud, we remain bullish on the Spider. But now the thing is, we're getting to these old resistance levels there. You can see that top end cloud chart resistance zone there. Bottom of the cloud there, struggling to get past that 592 zone and 596. And then the other level on top of that is this one, the top end of the cloud there. So you can see we've got some significant resistance levels to get through, but interestingly enough, we are rebounding from the turning line of the Ichimoku Cloud there. So far that support's holding up there, so you can see we're taking a little nibbling here, but as long as we stay above that turning line, this rally should be okay. And also you can see we're rebounding pretty much from that top end cloud chart support zone there. That used to be a resistance zone, got tested there, retested there. So that 581 zone, which incidentally we get off the weekly cloud, is a significant resistance zone. So these are kind of nice swing trade opportunities from that support back up to this resistance zone there. Narrow range consolidation there. So if we get a breakout out of that range, then we're looking at these upside targets, 603, 609 and 613 to the upside if we get a breakout out of that range. So those are the upside targets with this nice little rebound from the turning line, the Ichimoku Cloud. If we start slicing below that turning line, then the downside target would be the top end of the front end of the cloud here. We can pop a line in there just to see that one zone there. that 576, 574, and then the bottom end of the cloud, yeah, we can also see that as another support zone to be tested, 567. And by that time, the standard line of the Ichimoku cloud would have leveled out as well there. So 574, between that 581, 576, 574, and 567 is a major support zone. So we could possibly see if this resistance proves too much, we could see it drift lower the next couple of weeks and then rebound from this 574 and then move higher for a nice little rally further into July. There's still significant downside risk to test this top-end cloud chart support levels, but as long as we stay above these levels here, the rally should be okay. From an Ichimoku cloud chart perspective, any price action above the cloud is bullish, any price action below the cloud is bearish. But at some point, eventually, it becomes too extended from the top end of the cloud, or like we've had here, the bottom end of the cloud. So watch out, we're a little bit extended now from the top end of the cloud. So Fibonacci retracement from this move can be where? Let's take a look at that. So let's assume this resistance level is going to hold, and we're going to look for where is a possible Fibonacci retracement to, and we can see that 23.6 is around about 568, and that's more or less where we'll get the turning line leveling out as well as these critical moving averages there. So you can see that's a significant support zone for June basically. So any kind of weakness there, we could see some swing trade opportunities within that support zone between 576, 574 and that Fibonacci level of 568. A 38.2% Fibonacci retracement bring us to 552, which is this standard line of the Ichimoku cloud, as well as very close to the top end of the Ichimoku cloud there. So those are the significant support levels to keep an eye on. So those are the downside risk targets if support fails at that standard line of the Ichimoku cloud when it levels out at that zone. Next up, let's take a look at the 4-hour Ichimoku. On the 4-hour, it's very interesting how significant this bottom end cloud chart resistance zone is. We can see now we've made one attempt at that zone, and looks like we're going to make another attempt at that zone. We've got the spider fighting for support here, both the turning line and the standard line, so it's leveling out there, as well as very close to the top end of the front end of the cloud. So that's a significant support zone. So if this resistance level holds, we could come back and retest those levels and then rebound from there further. If the support fails, yeah, we could come back to retest the bottom end of the cloud and then do somewhat of that Fibonacci retracement on that zone, on that support zone. But keep a close eye out. We now pinch between this 592 bottom end of the cloud chart resistance level and this resistance zone that was significant on the way down, and now it's going to be a new support zone. So this 581, this zone and that top end of the front end of the cloud is quite a significant support zone. So we could see, will be interesting to see if we can get a continuation of that rebound from the standard line and the turning line to the upside now. So two levels of support, upside resistance targets is these levels 592, 595, 596 and 603, and then on the 4-hour Ichimoku cloud we've got these upside targets there, 606. So that's now we're going to get, if we break past this old high there on the 4-hour, we should see the upside, those upside targets. Here's the quick glance of the hourly Ichimoku cloud, nice trending cloud. We consolidating now. You can see there we've got the upside support zone there. We can the Ichimoku cloud giving indication that we might have another up move there, front in the cloud kind of predicting that. But we need to get past that resistance. So you can see we're in a consolidation zone here. So if it breaks out of this base, then we're going to hit those old highs to the upside target. But note how tight the support ranges here. The top end of the cloud and the standard line and the turning line pretty much in the same zone there. So it would be great if we get a nice high volume breakout past these old highs there on the 595 there basically on the Ichimoku cloud. But keep an eye on the hourly. If we start dipping and trading below the bottom in the cloud, yeah, then the market's rolling over, or the spider's rolling over. And then if we start heading downwards on the 4-hour, when we start trading below the standard line and the trailing line of Ichimoku Cloud, then we've got significant downside risk to the top end of the Ichimoku Cloud. But so far so good. Nice strong rebound rally, plenty of buy signals here in and around this rally, but it's getting a little bit difficult now because we're close to a major resistance zone. So keep a very close eye on the price action on the 60-minute, the 4-hour, and the daily to see if we're going to dig into that resistance zone and hit these old highs. Thank you for watching. Until next time, happy cloud chart trading. Bye for now.